is going on, chill investors? Welcome to Wheel Wednesday. All right, so we're going to have these videos come out every Wednesday morning for you guys, so you guys can kind of see what my thoughts are of the market as we are entering halfway through the week. What am I looking at? Which company should I be setting some covered calls, some cash secured puts? SoFi earnings came out today, which was Tuesday. I'm making this Tuesday night, so that way Wednesday morning you already have my thoughts for what happened the night before after close. All right. So we want to start with reviewing just the traditional stock market. Okay. Whether it's the S&P 500, the NASDAQ 100, the Russell 2000, right? So you have the SPY, QQQ, and IWM. Okay. So initially, I will take a look at these on the wheel strategy charting just to kind of give me an idea. Is the SPY at the top, QQQ, and so forth. All right. Most of the stocks I am talking about right now is going to be in the IWM, as I am more bullish for the small cap, mid caps. As I do believe SPY and QQ, for the most part, have ran their course. There's still a little more upside, but the bigger upside I do believe is in the IWM. But to start off, we'll start with the SPY, all right? So with the SPY, it has been running, and I do believe that we do see 700, okay, before year end, which is awesome. But we have left the Bollinger Band, all right? Usually not. I mean, it's a great sign, right? If you get out in time. But typically, you leave the band, it's a rubber band, we're going to snap you right back in it, okay? We've left a couple times, right? It left here, snap right back, right? Left here, snapping right back to this middle band, okay? So we do have a few gaps to fill if we take a look too. The market always doesn't fill gaps, but it sure likes to. So you do have a gap all the way down now to 678, and you have another gap right here all the way down to 672. All right, so that would be about a 15-point drop. Do I have a measuring tool on here? I do believe so. From the current price, 687, and so we could see a nice 1.25 drop, and if we fill the other gap, a 2% drop. All right, so 2% pullback definitely can happen. Could we squeeze all the way up to the 700 and then have the bigger pullback and make it like a 5% pullback or 3 to 5% pullback? Absolutely. Okay, not saying that's going to happen tomorrow, but just be aware if you are in the SPY or the QQQ, which we will go over next. I do see these gaps, and they most likely will want to be filled. And let's go into the QQQ and see if it's reading the same. All right. So again, it has left the band, okay? And yeah, same gaps, okay? You have it down here, the gap down to 611, it's going to want to fill. The gap down here to 618, right? So same thing, we've left the band. RSI is getting up here. It kind of gets to 75 as its high recently. So we're entering the 70-75 range where it kind of rejects and kind of pulls back. So QQQ is in the same point or same status that the SPY is in. Now, if we take a look at IWM, it's going to look a little different, okay? So let's zoom in. Zoom, 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 zoom. All right. If we can see, which it's kind of just running its course how the SPY and the QQQ should have, but the SPY and QQ just extended their lead outside of the band. But we left the band a little bit, and we're coming down here. Could we gap fill? Absolutely. That's only a point away. So I think this gap will get filled. I mean, yeah, 0.5%. We could probably see it tomorrow morning, Wednesday morning, before the rate cut gets announced, right? We could see a little bit of a sell-off, trying to fake people out, get people to panic. Everyone sells. Boom, rate cut, good news comes out, and then we go to higher highs, okay? That's how I'd picture it playing out in the morning. Again, just what I'm looking for when I'm just reading this, okay? I'm bullish. Rate cuts happening, maybe up to three rate cuts more this year, making a full point cut over the course of 2025, just like they did in 2024. So I'm bullish for that. China trade deal, government not being shut down, ACA extensions. There's a lot of good things that could potentially be huge catalyst. Again, I believe our president is not a guy who wants to be known for having a failing stock market for the American people. Obviously, he knows a lot of people that have their money in the market who continue to stack wealth and wealth and wealth through the market. So he doesn't want to let those people down. So I believe he'll say what he needs to say in order for the market to not fail him and fail us. Okay. Could he manipulate it for pullbacks? Absolutely. He definitely does. But as far as the market truly going to the red, as far as for the year to date, not happening. He won't let it. So, and I truly believe that he's got too much pride, you know. So now I want to get into a few stocks that we've talked about in the past, what I'm kind of looking at. So it looks like I got about 12 stocks. If you just want to see Lemonade, Hims, JD, SoFi, Tesla. This is Tesla, but I use the leverage Tesla. If I am going to run the wheel strategy, obviously the price is way less and it moves ×2. Okay. Little riskier, but if you believe in Tesla long term, then Tesla's fine, right? You don't have a problem. You believe in the company. So Oscar, Zeta, SBET, Webull, ONDS, BBAI, and Fubo. Okay. Now I have a lot, like I said, these are small cap, mid caps. These aren't the safe haven, Nvidia's, Amazon, right? Like I'm looking to grow our account as fast as I can for companies I do believe in long term. So Lemonade AI Insurance, I use their website. It's super fast, super quick. They have great reviews. I believe they are going to be a disruptor. Okay. Hims, healthcare. We're going through a sentiment, and people just like, oh, is Hims over with? Are they just a GLP-1 company, right? There's so many good catalysts coming out in 2026 for them as far as the international expansion and all the product lines. The product lines just came out. They haven't like fully done their outreach. So I'm curious to see kind of if they up their guidance this earnings. I honestly think they would. I think that'd be a good idea with all their new products coming out. There's got to be, you didn't already bake those into your guidances, I don't believe, in the past earnings. So it would make sense for Hims. Okay. JD, same price since like forever. I think this company should easily be probably $100 a share. So it's just a matter of time. They're just huge. All right. So let's get into them. All right. So Lemonade, we talked about them my last couple videos. If you saw my last 6 or 10 to buy, Lemonade was on there. It was down here, right? It was at the 48 range. We were saying play some cash secured puts, and sure enough, it's ran to the top of the band. Now you'd want to be looking at doing some covered calls, okay, on Lemonade, okay, 60. But you'd be wanting to look at the 30 delta, okay. Wherever that 30 delta is, if we go take a look here, I'm actually going to switch to the full screen and go right to Lemonade. Sorry, this is in order of most expensive to least expensive. So we're going to start with Lemonade here. Okay, we're at the top of this band. And if we go take a look, November 21st, and we go to a 30 delta on covered calls. Again, this would be covered calls, would be 70. Okay. You'd be looking to do about a $70 covered call on Lemonade, collecting somewhere in the middle of here. As much as you can possibly get of this 285 is where you'd want to set your covered call, okay? Now, if we go down to Hims is going to be in the cash secured puts side of things. We're still holding this 200-day moving average, which is amazing. Okay, we're just kind of bouncing here, consolidating. If we take a look at all the times this stock has had bad sentiment, and it's touching this 200-day moving average or getting close, even just getting close to it. But here was the last time, right? This April crash, right? If you would have bought down here in the 26s, and then you would have been rewarded up here in the 60s, 70s range, okay? Again, it came down here, just touched it in August twice, 42 range, again, and then it ran up to 64. Okay, we're going to get this entry again. We're going to get the mid-40s add, right, for cash secured puts. And potentially, if you get assigned, awesome. And then the upside currently at the band is 60. Cash secured puts, what I would be doing is going to be looking at the probably 44, 43. Again, dollar cost average into it. Again, November 21st is going to be the date. Dollar cost average. If it goes lower, then bring your strike lower, right? You did a 44. The stock goes down $1. Okay, now start doing 43s or 42s. You don't do them all in one go. You dollar cost average the same way you'd buy the stock. Okay, 30 delta. This is my Tuesday night, kind of just figuring out what kind of my game plan is if I'm looking to make a move. All right, JD. Okay, We are on the top half of the band. So if we get a red moment to this bottom and this 50-day moving average down to 33.50, which can easily happen, a dollar down, it's not unheard of, right? Dollar down, we touch this 50-day moving average, you're going to want to be doing a 30 delta, which is probably going to be roughly this 32.50 or 32, somewhere in here. You're going to be wanting to place a cash. It looks like there's plenty of support at that 32 range, so if you were to get assigned on the 32, you'd be getting it for a good price, okay? Well below the 200-day, below the 50-day, right? And those act as magnets, so we will be going back up. So that would be a buying opportunity. So I'd be looking at the 32.50, 32 range right here, all right? That's JD. Okay, let's go to SoFi. SoFi had a great earnings, okay? I'm a huge believer in SoFi, long-term and everything. If we take a look here, we are at the top of the band. Covered calls, okay? Now, SoFi is at a moment where rate cuts could send this thing, right? And I don't want to get, for me personally, I don't think the premiums pay me enough to cap my upside with SoFi. If premiums were juicier for SoFi, I would say, covered calls, it is what it is. But with the premiums not being as juicy, return today, like for some reason the stock was up big, but the premiums weren't up as much. Like you see, like I don't know, 35. Like premiums are only up on covered calls 3%. The stock was up 6 or 5. Like it wasn't up enough. 5% premium covered calls should instantly be increasing the 16-20% down here, but they weren't increasing at all. So I didn't place them. It didn't make sense to me. But what I would be doing is I'm going to be looking for this 40. Okay. Covered calls 40 for SoFi because I don't really want to sell them, but I would sell them if we got into the 40s by November 21st. There's a lot of catalysts. I'm probably going to wait for the rate cut to come out. That bullish rate cut news come out leading into the weekend, right? I think we do see 33, 34, and then we can probably set that 40, okay? That's what I'm looking for is this 40, trying to get a juicier premium. I'm going to wait for this to get a little closer to the 30 delta, maybe get it to 25 delta, and then I'll be placing the 40, okay? Tesla. So if you're a believer in Tesla, TSLL is a leveraged Tesla stock, okay? Times 2. So whatever Tesla does, this does it times 2. Tesla goes up 2%, this goes up 4. If Tesla goes down 4, it goes down 8, okay? It is leveraged. It is risky. It is not meant to buy and hold, okay? This is set a put, set a call. Set a put, set a call, okay? All you're doing is running the wheel strategy. I'm not buying and holding this. If you don't know everything about leverage ETFs, is that they can dilute you and just kind of run down the stock. So it's best to just keep flipping it. But the premiums are great, okay? Constantly 10% premiums. Again, if you only believe in Tesla, this is the stock, okay? If you believe in Tesla. But again, we're at the top of the Bollinger Band, so we would be doing covered calls. Okay, so if we were doing a covered call, we'd go to our 30 delta. Looks like 30 delta you could set at 27, right? You get about a $5 move to the upside, and then you'd also be getting to collect a nice, probably meet the middle, $1. $1.05 was like the last, so you can get $1 extra in premium for 21 days, okay? Again, if you want to wait for cash secured puts, wait for it to get down here towards the 17, this 50-day moving average. If it comes down to this bottom half, be looking to put your premium somewhere in the middle of this 50-day and 200-day moving average is where I'd be looking, all right? Now, Oscar is pretty much, I'm loaded up on Oscar, okay? The reason I'm loaded up is we have ACA potentially extensions coming out with the government shutdown being completed, okay? And that's all part of negotiations, and it's just it's a matter of when, not if, in my mind. So could we load up on more? If you're not in it, for sure you could load up. Cash secured puts right now, you're at a 50-day moving average red day. Could you get somewhere in this like 18, 17? I do believe so. Yeah, 18, there you go, 33 delta. If you want to be on the safer side, you can go for 17, okay? Get yourself a little bit of a red moment. Go ahead and place an 18 or 17 cash secured put. That's going to put you at that 1716 range, which is right here at this 200-day moving average if you collect the premium, which lowers that cost basis, all right? Again, if you don't know what we are working on or what I'm even talking about, make sure you go to the videos I posted in the very beginning about the strategy. Wheel Wednesdays are going to be more about what I am looking at and less about the teaching, okay? So, Zeta. AI marketing is basically the simplest terms of putting what Zeta is doing. All right. We are getting an opportunity here on this bottom half of the band again. Okay, this thing has ran. That is for sure. Now it needs to find its base, consolidate before we go to higher with earnings and everything coming out. I do believe that it will be bullish. I think the outlook is very bullish for Zeta. So I would just be doing a 30 delta cash secured put here. Be looking at 17. 17 looks like kind of the sweet spot. 1750. People are a little more bullish on this one right now, with more kind of open interest and volume happening on the 1750. So anywhere in this range, you're really going to be good. As you can see here, the 200-day moving average is 1650. 1750 plus the premium still buys it below the 200-day moving average, which is still an awesome opportunity. Long term, I don't know. I think this stock is easily going to double from here. Not even like super long term. I think within like, I would say 6 months, but it might even be sooner than that. So Zeta is a great opportunity. Okay. If you are a believer in Ethereum, SBET is the second largest holder of Ethereum. Okay. They are currently at the bottom of the Bollinger Band. They have been holding this 200-day moving average for the past, 4 days here, 5 days a little bit. Okay. Last time it held it very solid. And then sure enough, it had an opportunity. I don't know, 2 weeks. It was down here for 200-day moving average, and sure enough, boom, you could have bought down here at 8 or 9, and it went to 40. Okay, so it's doing the same thing. Bands are getting tighter. We're on this 200-day moving average. It's just a matter of time before Ethereum takes off to the 5,000, 6,000 range. And as being the second largest holder of Ethereum, you kind of get to be part of being the second largest holder of Ethereum, right? Again, risky plays. If you don't believe in it, don't invest in it. None of this is financial advice. I'm just talking to you about what I am looking at on the screen and how I'm processing all the information, okay? So you can play these safe. The premiums are really juicy. You can play it even safer. You can go down to the 1250, which is well below the 50-day or the 200-day moving average, right? And still collect a great premium at the 1250. Play a little less risk or a little more risky. You go up in the strike price, collect a little juicier premium, right? However you want to play it, but 30 delta is our default, right? Higher delta is going to be riskier. Lower delta than 30 is going to be safer, okay? And then we have a few more. Webull, okay? If all of you know what Robinhood is, and you've seen that journey for the past year now, okay? Webull is going to get there, okay? Again, it's a matter. I think if they let go of their CEO, the stock would skyrocket. Could that happen? Yes. Would anyone be warned? No. You'll be too late. In order to be part of this company, you just got to own the company, okay? I got a bunch of cash secured puts at 11, 12, and 15, okay? So I'm probably going to sign on the 15, but those are still November 21st. I have 11, 12. I might not get the 11 or 12, okay? It's standing right here at 11:31. It's touched 12 once or twice and then come back down. I'm fine owning it. I plan on owning it and holding it. Have its Robinhood moment. Rate cuts will help Webull. They're in international, 16 different countries. They're more advanced than Robinhood as far as what the brokerage is capable of doing, all the information you're getting from it. So they're more of like a true brokerage. To me, Robinhood is still on the gamey side of a brokerage. Webull, I am bullish on. Cash secured puts, 30 delta. You're looking at 1050. Safer side would be doing the $10 range. Okay. 11 would be the riskier side as of right now. Okay. ONDS has had an amazing run. It was 80 cents and it's ran all the way up to 11 over the past, 6 months. Okay. Now it's on its pullback time. Okay. Now it's time for us to figure out if we're going to be able to get in this thing. Okay, which it looks like we're going to be given an opportunity. We're at the 50-day. If it can't hold the 50-day, could it come down? Absolutely, it can come down to your 478, okay, moment here. That's what I'm looking for, but I'm going to dollar cost average because I don't want to miss out. As far as what the government is doing, they're really into their drones, really into military defense. ONDS is all a part of that. So I want to be a part of it. So I'm going to dollar cost average into it. Right now, you'd be setting some sixes at the cash secured puts. If it goes further down to 6, what you'd be doing is you're going to be looking at the 5s. Okay, if it gets down to 5, you're going to look at the 4. Okay, so there's going to be my 3, 6, 5, and 4. As it moves lower, if I set a 6, right, and this current stock is 679, once it gets below my 6, I will then set 5s. If it gets below my 5, I'm going to set 4s. See how? So that's dollar cost average into it, and my average should end up just being that middle ground of 5. Okay, that's what I'm looking to do. ONDS, again, had a good amount of volume here. If we look at BBAI, okay, if you don't know what BBAI is and you know what Palantir is, everyone's called this the baby Palantir. Okay, that's what it is. That's what people have been calling it. We were in this thing at $1.80. We sold it up here at the 8s, right? And it's kind of just rode those waves. So now we're going to be looking to get back into this, as I do believe they are soon to turn this corner of being not profitable. The CEO has tons of connections. If you don't know the CEO, please look him up. BBAI CEO was previously I might be wrong because I'm not going to look it up right now, but I know there is tons as far as he was part of Trump's previous presidential run. He was Homeland Security, Border Patrol, head of all of these things, okay? And basically, we got this thing on tracking mode. Hold on. Let's turn that thing off on tracking. Okay. Whoa. How do I do that? There we go. That was weird. So where was I? Okay, yeah, he's just a huge part of the government in Trump's previous presidential, during the time that he was in office. So now he's part of this company that's a huge AI. I'm so flabbergasted by BBAI because there's so many good things happening. The CEO really just needs to turn around the financial sides of it. Once he turns around the financial side of it and starts putting some true money behind, I know the backlog is really big, so eventually that backlog is going to catch up and everything's going to be good to go, and guidance is going to be that this thing could easily, I don't even know. I don't want to say the numbers, but I mean, Palantir, right? It just kept going and going and going and going. Well, this could do the same exact thing. The contracts are coming in. He has the crazy amount of connections inside of the government, so that's huge for them. So I'd be doing some cash secured puts. This thing is starting to come together. I'd be looking to own it for as close as I can to this 200-day moving average of about 522. Okay, so let's see here. You could probably start dollar cost averaging in $6 right there. If it gets right down below that 6, same thing. It's basically right there with ONDS game plan right there, guys. If you can take a look there, right? 698, 681, right? The 200-day moving average is 522. ONDS, don't look at the 200-day moving average. This thing has been moving, so it's way down here. But 478 is the bottom of the band, and bottom of this band is currently 572. Okay, so we're looking somewhere at this $5 range, maybe 6 on BBAI, ONDS. We're looking for 5. Okay, that's what I'm looking at for BBAI. Fubo, final one, Fubo. Okay, as you guys know, or maybe if you don't know, but Fubo is one of the largest international streaming sports platforms out there, and Disney and Fubo have looks like come to terms on a whole partnership that's been in the making all year, ever since this huge spike happened right here. This came out that the partnership was happening, okay? And then it's been just negotiations and lawyers and all year long, and finally shareholders voted for Fubo to approve of the merger, okay? And if that's the case, Disney now will become the largest subscription entertainment, because Disney is Hulu, ESPN, Disney, and then will be Fubo, which I believe if you combine all the subscribers of that is more than Netflix has. Okay, and this is a $3 stock. Well, guess what? It wasn't a $3 stock this whole time. It was a, let's get up here, $60 stock. Okay. So do I believe Fubo will get back to 60? Yeah. Do I think it's going to do it overnight? No. Okay. I think realistically, we get back to 6. I do think that's easy. 10, I think, is going to be the next stop. Okay. I am more interested when we get here. So I'm happy to hold. I'm just trying to buy as much as I can for the best value I can. So right now, sitting on the 200-day moving average, I think is a great opportunity to set some cash secured puts below the 200-day moving average. So you could do a 350, which is right below that 200-day moving average, which will give you a nice 30 something cents, 35 cents in premium, right? Get you right above that $3, which is below the the bottom of the Bollinger Band, well below the 200-day moving average. So yeah, Fubo, again, earnings coming out. Maybe they're going to raise guidance now that they have the Disney merger happening. I think they're just waiting on the DOJ approval to go through. Once the DOJ approval goes through, and everyone would assume guidance is going to be raised. Hopefully the DOJ gets approved before earnings, but if it doesn't, then we'll go through earnings. They'll still give their probable outlook. Okay, DOJ approves it. If DOJ doesn't approve it, right, then I think it's still very bullish for Fubo, actually, even without the partnership, because they were given a huge sum of money from Disney, even if the partnership doesn't go through, which actually got Fubo out of debt. Okay, so now they're cash flow positive, even if this merger doesn't go through, which is huge for their books. So I think it's bullish either way for them, but obviously partnering with Disney and getting the subscriber and obviously all the connections and money that Disney has to further advance Fubo would be huge. Okay, that's what I got for you guys on Wheel Wednesday. Sorry if it was a little longer, but we are going to have this coming out Wednesday morning, every Wednesday morning, so that way you guys have an idea of what I am looking at going into it. If you guys need any training, want the spreadsheet tracker, link is down below. Any previous videos on coaching or how we run our strategy, just click the other videos. Like when you go into our channel and everything, just go straight into like kind of sort by, I guess, oldest, because that would be the first ones of teaching you guys the strategy, and then click into our Wheel Wednesdays, because Wheel Wednesday is going to be all about what I am seeing. I'm going to talk through this stuff, tell you kind of what my thought process is, and then you guys can run it. Okay. All the other videos are all training and kind of teaching you more about how to run the strategy. That way, when you watch Wheel Wednesdays, you guys kind of know what I'm talking about and ready to approach the week going forward. All right, guys. See ya.